All right, guys. Well, welcome. I know we've been talking a ton about how to look at as a franchise as an investor, what to consider, what does the FDD look like, which brands are good, which industries are better than others, and now it's time to start getting into the hot seat. We have Walter Lacey here from Pet Wants, and we were just having a good conversation the other day, and you just mentioned having investors in your brand. And I said, ding, 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 we should talk. So thank you, Walter, for showing up and sharing your brand with us, and specifically the audience that's looking for more of an investor model. They can be a little trickier to find.
It certainly can be. And Lisa, I'm so excited to be able to share more information about really the pet industry and things to look for as an investor looking into one of the hottest and fastest growing industries that you can invest in at the time.
Absolutely. And I think that was one of the big things. Certain industries, at least for me, 20 years in this, right? As you know what, that one can be run, we can say semi-absent or even bigger empire builder investor model. Doesn't mean their hands are not going to get dirty. This is the franchise world. Your hands are going to get a little dirty, but it means there's other people in this system that are on the same path that you want to be on. They have invested in the model, they kept their corporate positions, and they're growing this business from the perspective of growing and scaling and building rather than just immediately buying themselves a job.
Yeah, absolutely. Right? We see a lot of that within our system, and I can't wait to talk more about it.
All right, very good. Well, let's get going here.
So some of the differentiators with Pet Wants is really what the market is looking for. They're looking for high customer service. Unfortunately, this pandemic created a lack of customer service in almost every industry. And we are desperately looking to connect and belong and have people that take the time to get to know us. And that's what we do at Pet Wants. We take the time to not only get to know you, but also your pet and what's best for your pet, to be able to give you expert recommendations that are not only convenient, but are great quality and affordable for your wallet. Now, it's important as you look at different brands as an investor, you have to find out what is secure. What do you guys have that's proprietary? What do you have that's going to guarantee my success? There's a lot of big competition in the pet space, and two very large competitors is Chewy and Amazon. When you think of these brands, if you're carrying the same products that everyone else carries, you're going to maybe make that sale on the first product, but then they're going to look at that product online and buy it cheaper. The key to Pet Wants is we have private labeled the majority of offerings in the pet space. That ensures that you have exclusive recipes that are proprietary for a Pet Wants franchisee only. We will never do any business with Amazon. We will never partner with Chewy, and we'll never partner with any other big box retailer or pet retailer. This is very important for our franchisees, because as a private label solution, we can coach towards a 60 to 70% margin. And once your customers try the product, fall in love with the product, they can't go online and find it cheaper. Now they're going to go online to your e-commerce page, but guess what? That's your page with your pricing, and you're getting the candidate there as well.
I love that. Let's talk about the launch, because I think this is a big differentiator for you guys with the investors in this space. The fact that they don't have to wait 9 months to a year to get their place built out. And there's a lot of money going out, not a lot coming in when that's happening. Go ahead and talk about that a little bit.
Absolutely. Absolutely. And I see it all the time. I used to be in a different brand and focused on retail, and that was the reality, right? And they make that investment, and 9 to 12 months down the road, they're finally starting to get an ROI. And the reality is no franchisee, whether it's an investor or a hobbyist or family business, nobody wants to wait 12 months to start generating revenue. And so we have a very unique approach here at Pet Wants, where we launch our business as a mobile and event-based business along with e-commerce sales. This allows us to get franchisees out to market in as little as 2 months after signing and becoming a franchisee. And this way, not only are they launching way before the requirement for the retail store, but they're generating hundreds of customers and going to receive hundreds of subscription clients, which is another key to our business, before they ever open those doors. And most importantly, to an investor, you're able to do this with part-time staff. So no full-time employee wages that you're going to be out of pocket for. In most circumstances of our business, you'll be operating off a part-time basis, at least for the first 6 to 9 months.
Yeah, absolutely. I love that. And I mean, I think from an investor standpoint, one of the things we're going to talk about is that recurring revenue, bottom line. Your business model is basically to scale that recurring revenue. Yes, eventually you're going to have a storefront, but you're going to have built-in customers, built-in people that are actually excited then to visit the store and buy add-ons and things like that. But you're going to start with a customer base. I mean, unlike in the world of maybe fitness, there's not a lot of other businesses out there that you get to start making money before you turn the lock, right, on the front door. So it's kind of cool. All right.
Absolutely.
Oh, I skipped over one, but we talked a little bit about the mobile, then next phase of this business is obviously small storefront though, not a big footprint.
Correct. Yeah. The key to our business and the reason why there's so many investors that are investing in our business is because we keep overhead significantly low. We do about 800 to 1,200 square feet locations. We really prioritize B and C class real estate over A class real estate. The reason for it is your traditional A class real estate comes usually in a gray shell. There's a lot of money you have to dump into it in order for it to be built out, versus our model moving into second gen retail spaces actually allows our franchisees to build out a store with as little as $25,000.
Right. It's going to feel more local. They can bring in some of the local culture, the brick on the walls, that type of thing is always and it's going to feel more homey, which is, I think your whole brand is come on in friends, right? It reads very coffee shop vibes to me. So,
yeah, and a lot of people don't even associate us as a franchise, believe it or not. They really look at us as the local heroes in the community and then someone they can go to for expert advice. And just the side benefit is we also offer franchises. So people that love the product, believe it or not, actually become franchisees. It's one of the largest segments of people that do become franchisees with us. They were customers first.
Okay.
And so when you look at our store layouts, like you mentioned, it's a warm, inviting atmosphere. Warm earth tone colors. We have all of our products displayed on walls versus an aisle. And that's important because at Pet Wants, we really strive to be able to provide expert recommendations on all products. And that means that maintaining eyesight with the customer is extremely important. And most customers won't admit when they need help. So you being able to see what they're doing and where they're looking and having the education that we provide, you'll be able to ensure that customer not only receives what they need, but it's going to be best for their pet.
Right. And when I think too, you guys really address the labor model with that, because I mean, let's face it, labor is not going to go away as being kind of a headache, right? If it weren't for the employees, we'd all be millionaires. But one of the nice things is that these are pet lovers. These are pet people. These are animal lovers. And they're going to have a passion for what they're talking about and helping other pet owners and helping them help their pets be healthy. I mean, I know it sounds cheesy, but employees that are super passionate about what they're doing and how they're helping, they stay around. And in an investor model, it's important.
And talk about that workforce. This business model allows you to bring in the people that are in your community that are typically looking at retail inventory stocking, working at big box stores, working at Walmart stocking shelves, et cetera. So when you have a brand that's so much fun to be a part of, and they're able to communicate and help pet owners and pets alike, the ability for us to get great people at an affordable price is vast.
Right. And it's hard to put in the brochure, but I think from an investor standpoint, investors will get it. Most investors have had employees before, and they know if you can find that little niche where the employee has a passion for what they're doing and they want to learn and they're going to spend time and energy learning so they can better educate their customers, you're going to have them for a long time. You're going to keep them for a long time, and they're going to upsell without trying to upsell. It's not sales training. It's just education on what you're offering. That's a big deal. Let's talk a little bit about the revenues.
Yeah, it's so important before we move to revenue, talking about that nutrition piece. We are firm believers in nutrition, education, and wellness. And we're so in belief of that we provide more nutrition training than what veterinarians typically receive when they go through private practice. We take nutrition that seriously. And that expert advice keeps that customer coming back time after time after time. Now, looking at the revenues that our business generates, it's quite substantial for what the cost of entry is for our business.
Yeah.
Really looking at 2023, you can see the previous 2 years here, but in 2023, this top chart, this is a 25% of our system. There's a lot of franchises out there that highlight the top 5%, top 10%, and being able to reach some of those may be impossible for some. But
Right.
when 25% of the system is driving over $1 million in gross revenue, especially for our project costs, which we'll talk about here in 1 second, it's really just exceptional. Now, not everyone's going to fall in that top 25%. Investors may fall in higher percentage, right? Or there's always a potential that you end up average, right? And average isn't bad. Our average location is generating $561,000 in gross revenue.
Very good. This is definitely where it gets interesting, because the revenues, and then you start looking at the investment, and you're going, hey, I can probably have more than one of these. And it gets really interesting. And then it's the ability to scale, the ability to be just across town and utilize one manager for 2 locations and 4 part-time people. Somebody's sick, I'm going to send them across town. There's a beauty in the ability to scale small rather than have this big, heavy Goliath that you're trying to maneuver. And I think you guys have done a great job.
Yeah, when you look at, a lot of investors look at these big box brands, right? Because they see this giant AUV, or average unit volume, right? And I'll use this as a reference. Let's call that a $2 million business, right? And they look at that $2 million business and they see the returns on it, and they may see 2.7 million, 3 million in the gross revenues, but that's putting a lot of eggs in one basket, taking on significant debt coverage, taking on a ton of employee payroll and overhead, versus Pet Once. And why we get a lot of investors that decide not to do big box and invest with us instead is, for that same money, you can buy 8 of our locations. You can take over an entire region versus taking over a very small chunk of the market. So investors that really want to grow a big business and really control market share and keep the money going to them love our model, because not only can you open multiple locations, but you can scale one at a time. We're not going to require our investors to open 8 locations overnight. We give you a really great development plan and schedule to provide you the protection of the markets that you want to develop, and then roll it out over time to really effectively help you launch this business.
All right, very good. Talk about that. So this is pretty unique, I think, to you guys, and we didn't want to skip this part.
Yeah, the Winner's Circle program is just such a unique program that we have. Essentially, the franchise fee, it was on the previous slide, of $48,500, is completely refundable with Pet Once. We have the Winner's Circle program, which essentially creates benchmarks over the first 5 years of your business. And each year you hit your benchmark, we're depositing a $10,000 check right into your bank account with no questions asked. You can use that money however you see fit. Who knows, you're working so hard, maybe you want a vacation. I know $10,000 will go a heck of a long way of getting away from the business and taking some R&R that you want, right? And so if you hit your benchmark every year, that $48,500 goes right back to you. I don't think there's any other franchise that's willing to pay their franchisees to be successful.
Right. No, I love that. It's a great program. Yeah. Now we get to talk about numbers, which is probably why most of our audience is tuning in.
And this is probably one of my favorite subjects. So what you're seeing here on this bar chart is boutique brands. You'll see our brand labeled specifically, but you'll see boutique brands. These are national brands that have been around for a little while, that have a number of units. This is not the 5-unit brand down the street. These are really big national brands. So you've got the boutique space, you have the grooming space, you have the boarding and daycare space, and then you have your big box. And so when you look at your investment ranges, the boutique space and even in grooming is very popular, because you don't see a lot of variances between the initial investment, right? Whatever your low end is, your high end isn't that much higher. But when you start looking at boarding and daycare facilities and big box retail, discrepancy between the minimum investment and maximum investment is huge. Looking at big box, you see the low end there at 450,000 and the high end is at 1.8 million. Let's be real. Who's opening a $400,000 big box location?
Right.
Probably not the people looking at the brand, right? And these investment ranges are there to showcase what a perfect world scenario is on the low end. And then what happens if you're on the high end, what does that look like? And so that's what we always talk about at Pet Once.
Right. And I think just to kind of little side note here, thought bubble, is that these are real numbers. These are not guesses. They're coming straight from the item 7. So audience out there, understand that we're not guessing. So the low range and the high range legally has to be in there for the FDD. And so when we say low range to 450 to high range, that means someone got in at here and they might have been in Timbuktu, Wisconsin. And this guy might have been in New York. We've got to be in that range. In the item 7, we're going to go through that. You're going to understand where your low and high end is. And what Walter's saying is sometimes that's a big swing. And there's no guarantee where you're going to land on that pendulum. That's where you kind of look for opportunities where the swing is a little smaller. It's been proven out to be a lower investment with a single. So just a little side note. Okay, let's get back into, talk about square footage, which also goes to item 7, right? So that's where that investment comes from. Dude, if it's 14,000 square feet versus 1,400 square feet, it's going to be much different of an investment.
Especially when you're talking about your base operating expenses. And investors know the easiest way to be able to drive revenue is to shave points off your operating expenses. What better way to do that to sign up for a brand that has a significantly smaller square footage requirement to where you're not shelling out tens of thousands of dollars on space that you may not even need to be able to grow an effective business.
Absolutely. Absolutely. Keep going. You like the bar charts.
Yeah, I just love them. This right here is probably my favorite. And again, all this information is federally regulated.
Right.
Like Lisa mentioned, all this information is from the FDD for these brands. Earlier, I was talking about our really impressive 2.56 return on investment. And again, talking about that number of how much revenue you generate divided by what the project cost is. And when you look at Pet Once across everyone else in the space, we have the highest return for investment at 2.56. There's other brands that are doing well, incredible brands. The majority of all these brands here I actually love. I have a love for a lot of different industries in the pet space, but the closest next one to us would be another boutique offering that's just shy of 2%. But when you start looking at your dog boarding and kenneling, you start looking at your big box retailers, a lot of those fall in the 0.5 point to 1 point, and in some circumstances, maybe 1 to 1.5 points. As an investor looking to get the most return on your investment, this is a really great ratio to look at and something we're really proud at to be able to showcase that we're the highest in the industry.
Yeah, I love that. Thank you for sharing it with us. I think would be easy to overlook, and it's great when you see it laid out that indeed this is one to pay attention to. This is why we do this. It's at the end of the day, you can love dogs, love cats, love gerbils. We're buying a business to make money.
Absolutely.
So, all right. Talk about your territory because this is interesting. Guys, this is item 12, right? So once we get through that FDD and we start looking, now you're getting close. You're saying like, okay, I'm with you, Lisa. I'm riding this horse. Let's kind of get into the nitty gritty. And one of the things that we're going to talk about seriously with the brand is their territory offering. What am I getting? And I'll tell you always, you want to put your elbows out a little bit. You want to make sure that you've got some wiggle room to grow. And I think you guys have that built in. It's a good conversation to have.
Absolutely. And here on your screen, you see 1, 2, and 3. So we've labeled that 1 as very loose language or even no exclusivity at all. That's something to pay attention to. If you're confused when you read item 12, it's in your best interest to gain confidence in what that is before you decide to move forward. The 2 that you see here is radius territories. Radiuses are very common in franchising. However, radiuses don't provide exclusivity in most circumstances because radiuses can overlap, as the only requirement is they not put another location within your territory. And so this is what that example looks like. So you may have a location and right next to you is your neighbor, and that overlap, that shared customer that you have there, there's no getting away from it. So now you're sharing your profits with another franchisee. And as an investor and talking a lot about that market share and being able to take over a whole region, really the way that we prefer to do things is based off secure territories.
Yeah,
and so we don't do radiuses, we don't do overlaps. We know that for our franchisees to be the most successful and generate the most profit, they need exclusivity. And that's so important. We provide the exclusivity to where you're never sharing customers with your next door neighbor. All the software and all the technology that we utilize recognizes these barriers and sends people to the appropriate location when making purchases. So it really helps that investor be able to grow, have security, and be effective.
Yeah, absolutely. Well, that's one of the other things that I love about you guys is that it reads kind of small town, and it reads homey, and it reads kind of coffee shop. And then we drop this technology on them and basically go, okay, let's go fishing in a barrel. So talk about this one. This is one of my favorite things that you guys do when you're looking at markets and really starting to figure out where you're going to put these locations.
I love talking about this as well. It's important that you invest in a brand and invest in technology. Just because there's not a store in a market doesn't mean you should put one there. When you call a franchise, you want to know that they have some data, that they can help you understand not only is a market available, but is a market available that has the customers that your brand typically retains.
Right.
And so here you see our top 3 consumer segments. Any investor that wants to have a conversation, boy, we can go down a rabbit hole on that, but I'm not going to today. What you're seeing is our affluent estates category, which is highly discretionary income. They own luxury houses, drive luxury cars, etc. Then you have your Gen X urban categories, kind of self-explanatory to some capacity, right? The Generation X that live in urban areas, which you see scatterplotted there. And then the bottom is the cozy country living. So these are individuals that live more on the rural side of the market, however, still see the importance and value of feeding premium pet food to their pets. We're able to gain this data because we partner with one of the largest commercial real estate groups that really allow us to study success that we're seeing inside of our retail stores. The data that you're seeing in front of you is actually compiled based off of 31 retail locations that were geo-fenced, and we track the cell phones of everyone that entered that store. I know that sounds creepy, you guys, but if you got one of these, I know where you go, right? So with that, we're able to monitor
the internet works.
Right. And so we're able to evaluate those cell phones and then see where they go and ultimately see where they live. That's what you're seeing here is the people that traditionally shop at Pet Once and where they reside within your community. So there's no guesswork. You know, if you put a location in an area with a high concentration of our customer segments, you're going to have a much higher likelihood for success.
Thank you so much. I appreciate this. And I think it's an important audience out there. This isn't necessarily a commercial for Pet Wants, but I think it's important to wrap your head around all of the technology, thought process, kind of the intangibles of looking at these businesses that the brand looks at when you guys are starting to think about, hey, are we going to be, I'm going to say willing to take on investors. Investors can be tricky franchisees. You guys have to be super buttoned up in order to handle them because the expectation is high and they are coming in as multiple unit owners. I appreciate the conversation to wrap their heads around the fact that it doesn't have to be a $4 million upfront, a $2 million upfront investment to be a good investment. I sincerely thank you for your time today. Thanks.
Thank you so much, Lisa. It's been an absolute pleasure.
Absolutely. Okay, guys, next slide, I'm going to share Walter's contact information, my contact information. For sure, reach out. You know, I can talk about, I'm allowed to name the name of the big box store, so we can talk about some of those as well, but just good investments, things to be thinking about if you're starting to consider diversification of your income through franchising. Thanks.